Big moves in the brewing sector. AB InBev, the world's largest brewer by volume, is thinking about making a bid for SABMiller, the world's #2 brewer. I'm joined by Scheherazade Daneshkhu, the consumer industries editor at the Financial Times, to have a look at the deal. So tell me a little bit more about this. Why would AB InBev be interested in SABMiller?
Well, AB InBev has grown through acquisitions. It's a bit of a merger and acquisitions machine, and it operates mainly in the Americas, where it's beginning to find growth a bit difficult to come by. SABMiller is very complementary. It operates in developing markets mainly, and a fit between the two would be very logical.
I guess what's interesting about these two is that although they're both global, they don't overlap in a lot of markets. So in Africa, where SAB is very big, AB InBev doesn't have very much at all. And in Latin America, I think that the countries in which they operate, there's very little crossover, so it works. The big crossover, though, is the US, where AB InBev owns Budweiser and SABMiller has a 50% stake in Miller Coors, the #2 brewer there. What do you think might happen there?
Well, almost everyone thinks that it's impossible for those two companies to combine in the US. So what would have to happen would be a disbandment of the joint venture, of SABMiller's joint venture with Molson Coors, another brewer. The two together have a joint venture called Miller Coors, and that would have to be disbanded. But SABMiller would have to find, or rather AB InBev, if it takes over SABMiller, would have to find a buyer for that stake.
I suppose a lot depends on whether Molson Coors was willing or able to take over the other 50% stake. Are there any other areas of crossover where there might need to be divestments?
Well, another big area would be China, actually. There, SABMiller is the biggest operator through yet another joint venture with China Resource Enterprises. In fact, in China, it owns Snow, a beer that is the world's biggest selling by volume. And AB InBev is also very present in China. It has a 15% stake. It has ambitions to get bigger in China, but again, a complete combination between the two wouldn't be possible there. But it's not clear exactly what could be sold off, because most of SABMiller's stake is in Snow.
There's lots of uncertainty there. I guess what AB InBev is hoping for, as well as the geographical benefits of the combination, will be cost savings. And we know from previous deals that you alluded to before, the Anheuser-Busch deal, the Interbrew deal earlier that the company has bought. It's done very well with its cost savings. It's managed to squeeze a lot out. And the most recent deal for Grupo Modelo, the Mexican brewer, AB InBev promised initially to take out 20% of Modelo's cost base, which is a huge amount. Do you think it can do the same with SABMiller?
Well, I think SABMiller will be harder, partly because SABMiller is already fairly tightly run, so it doesn't have the same kind of synergies that a lot of AB InBev's previous deals have provided it with. So that's a big thing. The other thing is that unlike AB InBev, which operates in I can't quite remember how many countries, maybe about 20 territories. SABMiller is spread over a much broader range of territories, and 70% of its sales are in emerging markets where you have poor infrastructure, it's difficult to get distribution and stuff. So anyway, the cost base there will be a little bit higher. So I think it will be challenging for AB InBev to derive the same level of synergies as in previous deals.
Sounds like it's the biggest challenge yet for AB InBev's very experienced deal makers and management. Scheherazade, thanks very much.